Welcome to Cold Brew Finance's end-of-week World FX, stock markets and commodities deep dive for Friday, February 28th, 2025. Kicking things off, I'm Victoria Cashmore. The US dollar strengthened across major currencies this week. The greenback showed particular strength against the euro, closing at 0.9636, up 0.0080. Maintaining a strong positive trend. Against the Japanese yen, it rose to 150.61, up 1.38, despite showing a strong negative trend. Weekly returns show notable strength in the dollar's performance. Against the euro, it gained 0.84% for the week, though showing a slight decline month to date. The Australian dollar saw the most significant weekly decline against the USD, dropping 2.38%. Looking at longer-term performance, the Japanese yen stands out with a 3-year total return of 31% against the dollar. The British pound shows a decade-long pattern of weakness, with the dollar gaining nearly 23% over the 10-year period. The dollar posted gains across Asian currencies. Notable movements include a 2.5% rise against the Kiwi to 1.7859 and a 1.7% increase versus the Loonie to 1.4458. The greenback maintains strong positive trends against both the Indian rupee and Singapore dollar. Weekly returns reveal the New Zealand dollar's significant weakness, with the greenback gaining 2.58%. The Canadian dollar also struggled, with the US currency advancing 1.71% over the week. The Singapore dollar showed resilience, limiting USD gains to 1.12%. Long-term trends show the dollar's persistent strength against the Indian rupee, with a 10-year gain of nearly 42%. Against the Kiwi, the greenback has appreciated 35% over the same period, while maintaining more modest gains versus the yuan offshore.
Looking at global stock market tracking ETFs, I'm Max Profit. Spain leads the advances, up 0.88 to 36.8, marking its 7th consecutive weekly gain and a new yearly high. Hong Kong rose 0.40 to 17.59, showing upward momentum with 3 straight weekly gains. Spain's ETF shows the strongest short-term performance with a 2.5% weekly return and impressive 9.4% month-to-date gain. Hong Kong follows with a 2.3% weekly return, while maintaining positive momentum across shorter timeframes. Looking at longer-term performance, Spain shows strength with a 22.5% one-year return. Austria demonstrates consistent growth across timeframes, while Turkey shows significant volatility with an 83% 3-year return, despite recent weakness. Indonesia leads the declines, falling 1.64 to 15.96, marking a new yearly low. Brazil dropped 1.36 to 24.11, while South Korea declined 2.92 to 54.67. Thailand and New Zealand also hit new yearly lows amid strong downward trends. Indonesia shows the steepest weekly decline at 9.3%, with significant weakness extending to a 12.8% month-to-date loss. Brazil and South Korea follow with weekly drops exceeding 5%, while Thailand shows persistent weakness across all timeframes. Long-term performance shows Indonesia down 29% over 1 year and 34% over 3 years. Thailand and Brazil both show significant weakness with 3-year declines exceeding 25%. New Zealand shows relatively better long-term stability despite recent weakness.
Considering commodities, I'm Liquidity. Gold futures reached a new all-time high at 2,963.2 last week, but closed down 104.70 to 2,848.50 despite maintaining a very strong positive trend. Silver declined 1.51 to 31.50. Palladium shows significant weakness, dropping 91.20 to 899.70 with strong downward volatility. Short-term returns for metals are notably negative. Palladium shows the steepest weekly decline at minus 9.2%, while maintaining significant downward momentum. Gold and silver, despite recent pullbacks, maintain positive year-to-date returns above 7%. Copper remains relatively stable with modest gains. Looking at longer-term performance, gold leads the pack with a 10-year return of 135%, averaging 8.9% annually. Silver follows with 90% over the same period. Aluminum and palladium show more modest gains, with 10-year returns of 24% and 10% respectively. In energy futures, gasoline shows notable strength, rising 0.19 to 2.22, with strong upward volatility. Natural gas dropped sharply by 0.40 to 3.83. Crude oil continues its downward trend, marking 6 consecutive weeks of decline. Brent crude settled at 72.81, down 1.62. Weekly returns in energy show natural gas declining 9.4%, while gasoline surged 9.6%. Both crude oil benchmarks remain negative year-to-date, with Brent down 2.5% and WTI showing a 2.7% decline. Heating oil continues its downward trend with some volatility. Long-term energy returns show natural gas leading with a 10-year gain of 40%, matching crude oil's performance. Brent crude and gasoline show more modest gains of 16% and 12%, respectively, over the decade. Heating oil remains nearly flat, with a 0.7% 10-year return. Feeder cattle leads livestock futures, up 7.2 to 274.98, marking 3 consecutive weekly gains. Live cattle extends its losing streak to 5 weeks. Class 3rd, milk broke down from sideways movement, falling 1.53 to 18.69. Lean hogs declined 4 to 83.67. Short-term livestock returns show Class 3rd milk down 7.5% for the week, while feeder cattle gained 2.6%. Year-to-date, feeder cattle leads with a 4.5% gain, while Class 3 milk shows the largest decline at -8%. Lean hogs maintain modest gains despite recent weakness. Livestock futures showed mixed performance. Live cattle futures closed down at 192.65, marking its 5th consecutive weekly decline. Feeder cattle rose 7.2 to 274.98, showing a strong positive trend. Lean hogs dropped 4 to 83.67, while Class 3 milk fell 7.5% to 18.69. Corn futures declined 4.4% to 469.50. Grain futures saw broad declines. Wheat futures suffered the largest drop, falling 48.75 to 573. Corn futures declined 21.75 to 469.50, while soybeans lost 31.50 to 1,025.75. Rough rice dipped 0.22 to 13.51. The exception was oat futures, rising 9.75 to 369. Looking at short-term returns, wheat futures showed the steepest weekly decline at 7.8%, while oats demonstrated strength with a 2.7% weekly gain. Year-to-date, oats lead the group with an 11.6% return, while rough rice lags with a 4.2% decline. The 10-year performance shows modest gains, with corn futures returning 19.4% and oats gaining 27%. Wheat's performance has been particularly weak, with a 3-year annual rate of return of -15.6%. Soybeans show essentially flat returns over the decade. Soft commodities faced broad pressure. Sugar saw the steepest decline, dropping 13% to 18.52. Cotton futures hit a new one-year low at 65.25. Coffee fell 15 to 374.25, despite maintaining a strong positive trend. Orange juice continued its decline, marking 10 consecutive down weeks. Year-to-date returns highlight divergent performance. Coffee leads with a 17% gain, while orange juice shows the steepest decline at -38.6%. Cocoa's monthly decline of 17.9% indicates significant recent weakness, while sugar's weekly drop of 13% shows accelerating downward pressure. Long-term performance reveals coffee's strength with a 166% 10-year return. Cocoa has gained 191% over the same period. Orange juice, despite recent weakness, maintains a 148% 10-year gain. Cotton shows the weakest long-term performance, essentially flat over the decade.
And with that, we wrap up another end-of-week World Currency, Markets and Commodities episode. I'm Victoria Cashmore, along with my AI co-hosts Max Profit and Liquidity. Thanks for watching. Look for daily wrap-ups every day just after 5 p.m. New York time. Please like, subscribe, comment, share. Cold Brew. Finance is an experimental project with market reports written, narrated and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency and commodities. Thanks for watching.